All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're going to talk about what people are missing, right? And everyone says that this time is different. Will this time actually be different? And will we be able to avoid a big crash? There's lots of important data out there that you guys are overlooking. So I want to bring you guys aware to that and really just make you aware so that way you guys can be prepared. All right. I went over all of the data of what the market does historically in the month of June, as well as during pre-election cycles and also after the debt ceiling deals. In today's video, we're going to go over some of the warning signs to be cautious of right now. So make sure to smash that like button, subscribe to the channel if you guys are new. All right, we're going to go over TLT, the stock market, SPX, as well as a few other ticker symbols that are on my watch list for trade ideas. I'm not in any of them currently at the moment, but I'm definitely looking to possibly enter into some of them. So smash that like button, subscribe to the channel if you guys are new. The bond market preps for T-bill deluge after debt ceiling deal. Now, the bond market is going to be flooded with treasuries. Okay, that is part of the debt ceiling deal. All right. And if you take a look, right, just the proof is in the pudding. Look at the huge auctions that we're having today, guys. Okay. So today, at the time of this recording, was the 12th. Okay. So we had huge auctions today on the 12th. Right. And I want to show you guys, they literally are massive. Okay. $65 billion, $58 billion. Okay. $40 billion, $32 billion. All right. And we still have more to come. All right. Later this week. All right. We have on the 13th, we have many more. Okay. If you take a look, that's 38 billion, 45 billion. And then we also have 18 billion here. So, I mean, tons and tons of treasuries are hitting the market right now. Okay, and that's going to be affecting things like TLT as well as the S&P 500, right? If we take a look at TLT today, which we'll do that right here, we can see that we actually had this crazy wick of a candle on the daily chart where TLT dropped down really hard and then rebounded back up. I did have some short positions in TLT that I swung over the weekend and was able to close those for a nice profit this morning because I was anticipating, right, this large amount of treasuries hitting the market and potentially causing something like TLT to drop for a little bit. Now, it did rebound massively afterwards and was able to recover. And, you know, the bond market is much larger than the stock market. It does tend to correct itself. All right. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the full disclaimer, okay? Now, if we go over TLT's daily structure, the current path that I'm tracking is actually going to be a 5-wave structure, taking us down to about $96, maybe $97. Now, if we really want to extend this structure, all right, it is possible. We have this gap down here. That's what this blue box is, okay? Notice there's a gap in between this candlestick and this candlestick on the daily time frame. These fill about 90% of the time historically. The big question is when they're going to fill. So you can see here, we've got 3 gaps to the upside, right? Right here, and right here. And then we've got 2 larger gaps to the downside. Now, we did fill half of the first gap down. And I mentioned that this is a bullish signal, okay? If you have a gap down and you fill about half of it, now that's not a perfect, you know, line right there in the center, okay, that I just drew, but when you fill half of a gap, okay, that's typically a bullish signal if it's a gap down and showing you guys that, hey, buyers are strong in the market right here and they're going to push price back up higher. And we did see a nice move to the upside in TLT, right? But overall, all right, it seems to me that we broke the larger structure that we had, this triangle pattern that we had here. We're squeezing, and we got a very textbook breakdown and retest. All right, and it appears that we're pushing lower for this wave 5. All right, now we have the rest of this gap here to fill. And then, as I mentioned, we also have that gap down to 95. Now, the big thing we're looking for and the question mark right now is going to be the MACD. If we see this MACD roll over and curl down below the yellow line, that could be what's known as an exit signal, right? And the daily MACD has worked very well for buy and sell signals on the TLT time frame on the daily chart. It's been a really good indicator. So I'll be looking to see if that ends up happening and if TLT ends up rolling over down below 100, right? That's going to be really interesting to me to see what happens there, all right? Now this is our weekly chart right here, all right? And if we look from a weekly chart perspective over here, we had a little bit of a bear flag. We got the breakdown. Okay, and it appears we're putting in this larger bear pennant right now, and it's very possible we could see a larger move downwards on TLT as more and more of these treasuries hit the market. Now, is that a guarantee? Is that have to happen? No, that doesn't have to happen. All right, but one thing that could also cause that to happen is if the Fed continues to raise interest rates. Okay, the bond market essentially has been calling the Fed's bluff, saying that they're going to pause and also pricing in rate cuts, towards the end of the year even. And if Powell just continues to keep chipping away and slowly rising interest rates by 25 basis points, then we may see more of a drop in TLT. Now if he starts to pause or cut, that could be very bullish for TLT, and also other things like TMF, which is basically going to be your 3x leveraged 20-year treasury ETF. So I have a really good video actually that I do recommend watching, that compares TLT, TMF, and the Fed fund rate, and it shows you guys the performance of each of those funds, right? Each of those ETFs during rate hiking cycles, rate pauses, and also rate cuts. And it's really, really interesting and shows you guys, year by year and time by time period, which times, it's been a good time to actually get into TMF. And we are approaching that, in my opinion. Now, I don't have any TMF yet, but I'm definitely interested in it right now. And it's definitely on my watch list. So we'll see what happens there. You just have to type in exactly trades, TLT versus TMF. It's a really good video, okay? Now, what are the warning signs, okay? The big warning sign right now is the amount of greed we have in the market. And we're going to go back in time and then look at the present data that we have right now. And so we can see here August 16th, okay? So that's what 816 is on the chart. You see we have this huge move to the downside. Well, what was a possible warning sign that we were going to get this really big move? Well, the fear and greed index was up here, okay, at a very high level of greed at 68. All right, that is your fear and greed index. Now, this is not the VIX, okay, not to be confused with the VIX. Now, over here, December 1st, when we see the fear and greed index at extreme greed at 76, all right, December 1st, you see we also have another large move, guys. These are 200, 300 point moves on the S&P 500. So it's not like some small deal. Okay. We went from, we went from up here close to 4,100. All right. All the way down below 3,800. It's a big drop. Okay. Over here, we look at February 1st. All right. And we see February 1st, we're trading around 4,200. And then we have another 300 plus point move to the downside, dropping close to 3,800 here on February 1st, when the fear and greed index peaked at 82. Right. And if we take a look now where we're at 77. So we have seen the fear and greed index go higher up to 82. But, if we do get a large move to the downside, it's very possible we could see another 200, 300 point move or correction based off of the fear and greed index. And, when it gets frothy like this and when the market gets too greedy, right? We just went through a whole timeline of each of the peaks on here on the fear and greed index, and we saw that very sharp moves to the downside came afterwards. So that's definitely something that, I think people should be aware of and cautious of right now. All right. Not saying you have to be uninvested in the market, but you at least want to be prepared mentally or have some type of a a plan in place in case we do end up seeing a really big correction to the downside. Now, it doesn't guarantee that it has to happen. All right. But it is just interesting when you look historically at the data, what has happened. History doesn't have to repeat itself. That's what we'll have to see in the near future. All right. Now, one thing that I do want to highlight is, in my opinion, we are in stage 2 now, guys. Now, I know it may not seem like it, all right? And I know it may not feel like it, but it does seem like the market is switching phases in our cycles, and we could really be heading for a nice bull market, okay? And the reason I think that we're right here in stage 2 is because this is when you see stocks and bonds start to bottom out, okay, and start to go up. And what do you see? You see commodities going down, right? That is, the telltale signs of stage 2. And what we have right here in white is the commodity index. Then we have the stock market index here in blue. And then we have the bond index here in yellow. And we can see that stocks and bonds appear to be putting in this rounded bottom right here, attempting to, okay? It's not for sure, right? These things definitely could go more to the downside. All right, that's definitely a possibility. But, being with what we're seeing here, where stocks and bonds look to be putting in a base, all right, That's exactly what you see here in stage two. So on a more macro perspective, it is very possible that we could start seeing stocks, bonds, and commodities continue to rally, all right, furthermore into the future. As it appears we're in this stage two right now, with commodities going down and stocks and bonds putting in this rounded bottom here. It looks very nice to me. That's definitely something that I'm paying attention to. Now, when it comes to some individual stocks, PDD looks really, really good to me. And yes, there is actually a pattern known as a frying pan bottom. And that's what this is right here. Okay. This is, what a frying pan bottom looks like. And, you see you have a little bit of the selling channel here, and then you start to put in a little bit of a buying channel. And to me, that looks exactly like what we have here, right? We have a little bit of this selling channel here. It's almost like a reverse Nike swoosh. Okay. And then you start to get this buying channel. Right. And to me, it appears like we are putting in a frying pan bottom. And I'll be looking to see if we can potentially put in a big move like this sometime in the future. And what's really interesting is we have this huge gap up to fill on PDD right around that $90 price level. And it's currently trading around $76. So, this is one that I'm definitely watching right now. The RSI still has room to run. Okay. It's below 70. So it's not at those overbought conditions quite yet. And we really could see this thing ramp up here in the near term future. So definitely one that I have on my watch list. Maybe it's something that you guys would be interested as well. All right. Again, kind of looks like a little bit of a reverse Nike swoosh we have going on here. All right, with a little bit of move like this. I really like the setup that we have here. A nice rounded bottom putting in here. Those are topping signs and bottoming signs whenever you have these nice roundedness. All right, up here we have a rounded top that doesn't look bullish to me. Sure enough, stock drops, and now it appears we're putting in this frying pan bottom. Maybe you guys just learned about that pattern. It's a pretty nice one. Okay, now here's another interesting pattern right here. This is Uber. Okay, this is the Uber daily chart, and we have a bump and run forming, right? So a bump and run is this pattern here where you have a prevailing uptrend, and then you get a bump up, right? A bump trend line here, a bump in the price, and then the run is going to be where all of the money is made or lost, right? If you're not prepared for this. So, this pattern isn't confirmed, just like the frying pan bottom isn't confirmed, but these are patterns that you look for the setups, and you look to see if the patterns give you signs of confirmation, and then you can look to potentially trade them, right? So here we have the prevailing uptrend, right? Then we have our bump up. All right, and we're going to see if Uber breaks this, these patterns and these trend lines right here. It's got 3 gaps down to fill, guys. It's got one here, and also another one all the way down here, just above $26. Right. We also have something known as bearish divergence on the chart. You can't see necessarily right here, but if you take a look, right, we have some highs over here, and then we're putting in higher highs right here. So it would look like this, right? You have a high, and then you have a higher high, and on the RSI, you have a high, and then you actually have lower highs over here. So this is a simple term known as bearish divergence. It's an indicator you could see some type of bearish activity. Now, it's very risky to try to short these things, to short the bump and run pattern while you're still in the bump phase. Okay. You really need to wait for that trend line to break and give you some type of confirmation that you're going to have the move down, because, for instance, over here, if you're trying to short it here and it just continues to go up, you're going to get frustrated and potentially even stopped out of your short position, right? This is another one that I'm looking at right here. We do have a nice little cup and handle forming. Okay, if you take a look, here is our cup. Here is our handle. And I dropped a FUBO video last week, right? And $1.92 is that level that I'm bullish above. If we can get above $1.92, I do think it's very possible we could see a larger macro structure of an ABC up, potentially taking us to 240, maybe even 265 if FUBO really wants to get going. Now, does it have to, go all the way up there? No, right? We could come up to our recent highs. Let's say we get a little cup and handle breakout here. We come up and then we put in a double top here. We need to be cautious of an M pattern forming here, okay? With that double top around that area here, this is going to be right below $2.20 per share. Again, speaking of gaps, if you take a look, there's a big gap down right here on FUBO from its recent earnings. And if that gap wants to fill, that could catch a lot of people by surprise. Now, there's tons of market catalysts this week. All right. So make sure you guys are prepared. All right. I gave you guys a couple bullish setups. I gave you guys a couple bearish setups. And hopefully you enjoyed this video. If you did, smash that like button, subscribe to the channel if you guys are new, and I'm out.